Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Shawn, Cruz, Head Trading Strategist at TD Ameritrade, to discuss the September reading for the Investor Movement Index. The IMX is TD Ameritrade's proprietary behavior-based index aggregating Main Street investor positions and activity to measure what investors actually were doing and how they were positioned in the markets. And Shawn, not much of a surprise to see investors dial back their exposure for the month of September. And if I remember correctly, August has actually been the only month where they did dial up exposure. So it's kind of been consistent with the pattern we've seen all year.
Yeah, I think it is. There's a little bit, I think, of a head fake that we got in August, where there was a sense that perhaps there's a Fed pause or pivot that could be approaching. I think the Fed did more than enough to signal that that is not the case. They're committed to getting inflation down, not just lower, but back down to a more sustainable level. And I think that's why you saw a pretty sudden reversal out of markets by and large, but specifically as we're looking at our clients, we did see them dial back some of that exposure over that period.
Yeah, and Shawn, I think it's a good point that you bring up when it comes to the Fed, because investing based on hoping that the Fed will pivot one way or another is not necessarily perhaps the best strategy to take, because it doesn't sound as if the Fed is going to shift its policy. It's been pretty clear in telegraphing its intentions to continue on the course that they're currently on until they see the data come back to where they think it's appropriate for inflation to be.
I think so. And so I think that's why you're seeing a lot of this really hit some of those more growth-related stocks, just because rising rates and the potential for that to have an outsized effect on just global economic growth certainly makes sense. That's sort of a 1-2 punch for a lot of risk assets. But there's going to be a little bit of opportunity seeking here where maybe they're not going all in. And I think the fact that we're still seeing the IMX tick lower shows they're not going all in, but they are finding some opportunities out there. And it is interesting, some of the names are flying opportunities in are the names that have been unloved, so to speak, from markets as of late.
Yeah, and another thing that's interesting, typically you'll see a mixed bag of sectors when you look at the buys and sells month to month, but there was a lot of technology accumulation for the month of September.
It is, and I think there's something about when you start to see some of these names have the pullback that we've seen, and specifically looking at these chip makers, that was a little bit of a surprise given some of the news we've seen recently, but that caught a lot of investors off guard, not just some of the revenue or demand warnings, but also the geopolitical risk that's also emerged in the past week or so. That caught a lot of investors off guard. But ahead of that, and you look at September, a lot of these semiconductors, and you can look at the semiconductor index as a whole, they were really trading well off of some of the highs we had seen them at, but it's sort of been getting a little bit of stability around some support levels. And I think that's why you saw investors go in and wanting to dip their toe in the water as we were looking to see if maybe those support levels, that's kind of where they go until things get into the clear, and then maybe there's a little bit more upside. I think that certainly caught everyone off guard, and once it broke through some of those support levels, and I'm thinking of NVIDIA, AMD, Intel specifically, once they broke through some of those levels, that I think is where you maybe had some investors decide to either stop buying or potentially even maybe steer clear of this sector and get out of some of those positions they were in. I think that's going to be interesting to see how they respond this month with the news we've got, if they actually maybe decide to add additional exposure to some of those semiconductors on this next round of pullbacks we've seen.
Yeah, and Shawn, the millennial demographic was largely in line with the overall investor population, which I thought was interesting too. However, they were selling names in companies like Bed Bath & Beyond, which could perhaps suggest that meme stock craze, at least for that demographic, is kind of fading out a bit here.
I think so, and those names, we usually, when we see a major announcement coming out, that is where you see the activity pick up, and then usually once that event or whatever that a lot of those investors are focused on passes, you see them sort of exit out of those names. Either they got the move they wanted and they're taking profits, or the news that came out wasn't what they were expecting, and so hey, I thought maybe this was a potential catalyst. It didn't happen. I'm just going to move on from this name in general. I think it's not surprising to see the small sort of investors that do find some sort of an interesting story or theme they want to trade those names off of. They usually don't hold those for the long run. It's usually more of an event-based type of a trade.
And Shawn, to wrap up here, finally, earnings, something else to talk about besides the macro headwinds that the market is facing. Do you think at this point that perhaps all those headwinds have been discounted and it's priced into the market?
I think we're in a better spot to handle any sort of negative news. I'm more worried about what we might hear from management teams. Analysts, by and large, across the board have been lowering price targets, lowering estimates. So the analyst community, I think, is really pricing in a lot of that negative sentiment. The management teams have not come down quite as much. So I do think it's going to be interesting to see which side of that coin is up being the correct one. Are the management teams going to have to maybe get some sort of a come to Jesus moment, start lowering their outlooks for next year? Or are analysts going to say, we were a little too pessimistic, in which case you might get some price target increases potentially. But there is that disparity between the analyst community and management teams that I think is going to be interesting to see how that affects post-earning moves. But I'd be a lot more concerned around downside risk out of this earnings season if we were up around 4,000 instead of down at 3,600 or whatever levels we're trading at on the S&P 500. But also for the Nasdaq 100 in particular, they've really had a lot of that those high multiple, a lot of those growth names. They've had a lot of that pull off the table, and I think that can actually serve as a little bit of a stabilizing factor if we do get some bad news, that it is potentially more or less priced in.
All right, Shawn, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.